Hello, everybody. So we are live. A very happy Thursday. What a good Thursday to be doing NFA live, guys. The markets are looking amazing. So hello, as always, to Ben and Rob. Great to have you both on the show. First of all, how are you guys doing?
I'm feeling pretty good. This market is heating up finally. It wasn't a bad day yesterday, was it?
It was not a bad day at all. Actually, me and Guy were live at the time that Bitcoin broke 60K. We were watching avidly on our laptops. And a big thank you to everyone that joined yesterday's live that's also here again today, because it was a pretty exciting time. We even had these Bitcoin glasses that we rocked on, especially for the occasion. I'm not going to keep them on today because they do limit what I can look at on the screen, but it was smiles all around. Ben, how are you doing today?
Yeah, pretty good. Just sick as usual, but doing pretty well and excited to talk about crypto with you guys.
Amazing. I have a few people in the comments that I can see asking where Guy is at. So Guy's family is in town. So Guy has gone to Abu Dhabi for the day to do the family festivities and show them around. I did make the joke on X that he was already shopping for which color Lamborghini that he wanted. Don't worry, he's not gone full degen yet and full Dubai crypto influencer, but he is with the family. But thank you guys so much to everyone that is joining in and for all the hellos. Guys, I think we should kick it off with the first question for today, which is taking a look at obviously the markets and where we are at. Bitcoin has blown past $60,000. It's been a great week all round. But can anything stop Bitcoin now? So the ETFs, they seem to be hungrier than ever, and that than most of us actually expected. So the big question for you guys, do we need to throw our prediction models out of the window now that the markets have so fundamentally changed? Who wants to kick it off? Rob, maybe we'll start with you.
No, Ben's got all the models. Let's hear what Ben says.
I think it was when it comes to the models, right? The sort of the view is that all of them are wrong. Some of them are useful, right? I mean, I don't think any of the models are ever going to predict where Bitcoin's going to go. If you guys remember how crazy it was in 2021 and all the models, a lot of the models that were really optimistic back then ended up falling short. So yeah, I think that it's a good idea to have models to give us ideas of what could happen, but they're certainly not going to tell us what will happen. It is true that Bitcoin is a lot more heated than it normally is at this time in the cycle. You guys remember, I guess, like March? I guess last cycle was kind of different because we had the pandemic, right? But usually Bitcoin's not quite this hot going into the halving. So I guess that's at least a difference. But on the other hand, we've also seen Bitcoin do this thing, right, where it rallies and it sucks that liquidity from the altcoin market. We saw that, sort of mid last cycle as well. So I kind of think that's what's happening, right? I think that Bitcoin is slowly taking some of that liquidity back from the altcoin market. And is going to use that as fuel to go as high as it can. I have no idea how high that is, but yeah, and I think that in terms of has it fundamentally changed, I don't know if I would say. I mean, it's in some ways it's still doing what it's always done, going up aggressively. It's done that many times before. It can also go down aggressively too. So I don't know if I'd say it's fundamentally changed. But I do think that the spot ETFs they do offer kind of like a some change, right? A little bit of change, right? There's something there, I suppose, that has altered it a little bit, and also it seems to be lining up. It's sort of just like a series of events, right? You have the spot ETF, then you have the halving, right? And then theoretically after that, maybe the ETH ETF, although I don't know if that's as sure of a thing. Jessica, do you know if the odds have changed on that or not? I think last week you said they were like 43% or something.
That is a good point. Let me get it up while you finish your...
Yeah, so I guess my view is that I wouldn't say it's fundamentally changed. It seems like to some degree we're doing what we've done before, but the timing of it seems to be different than where it has been before. So I guess in that way it has changed, but I think every cycle is going to be slightly different and throw some curveballs in there just to keep investors on their toes.
And anything that could stop this rally that we are seeing? Is there anything that you think, because I guess profit taking would be a big one that you would see that potentially could stop it?
I mean, if you look at like the long-term HODL waves and stuff, it doesn't really look like, I mean, the last I checked, it didn't really seem like there were a ton of people, long-term holders, making any big moves just yet. I think I don't think anything crypto related could, well, anything could, right? But in terms of thinking like where we are in the cycle, a lot of the stuff that got washed out in 2022, I think that was sort of the artifact of all the money printing to get, basically get all that froth out of the system, all the companies that really were not, they weren't profitable, or they just didn't really have great business models, or maybe they just got unlucky. But those are out. I think that the things that could slow Bitcoin down, I mean, as repetitive as it is, right? You either have, if inflation were to reaccelerate, I think that could be something. We saw what happened in 2021 when inflation started to accelerate. And inflation reaccelerating is exactly what slowed the markets down back in the 1970s. Or if the Fed, maybe the Fed does do what they say they're going to do and they stay too high for too long, then if they start to cause weakness in the labor market, I guess that could slow Bitcoin down. As much as we all love Bitcoin, right? If people are just out of work, I mean, you can't go buy crypto as easily if you're worried about a job. So I guess those are the two main things that could theoretically slow it down, would be either inflation reaccelerating or the labor market showing weakness. But Rob, I mean, we were talking about that, a year and a half ago, right? Those are the two main things that could slow it down, and neither of those things have happened at this point, right? We haven't really seen inflation reaccelerate. We haven't seen any real weakness in the labor market. We've seen job openings deteriorate, hires deteriorate, quits deteriorate. But so far, a lot of that has just been getting rid of the excess that was created from the QE stage and all the money printing. So I think the question is can the Fed thread the needle and sort of cut rates soon enough to not cause weakness in the labor market, but they want to wait late enough to make sure that inflation doesn't reaccelerate. So it's a really tough task, and that's why people sort of roll their eyes at a soft landing, just because it's not historically the most likely outcome. Although there are some instances where it has happened, and I think 1967 is an example where there was in fact a soft landing after a yield curve inversion. So it's not impossible. It's just the probabilities are low, but it has happened before. It could happen again.
Yeah. And Rob, what is your take?
My take is that, first of all, I'm glad everybody's here, because everybody who's watching this video right now, did you know that you front ran the largest institutions in traditional finance? You guys did a great job. Like when everybody was laughing at you and calling you names and saying, that's dumb, why would you do something like that? This is the riskiest thing of all time. Now, the hardest thing that you have to do right now is to be able to not be so boisterous and have so much pride and be like, see, I told you so. So congratulations to everybody who's gotten here. So to piggyback off Ben, the macro is something to be concerned about. Right now, I know that we hit our all-time highs as far as the S&P 500 and the stock market. I want to say 2 weeks ago. I don't know if we're still over 5,000. Everything's hot in the markets right now, and that's all markets. You have to kind of consider that. What will happen down the road? Well, just like we just talked about, if it's going to be higher for longer, does that mean that the economy is going to go in the ground? It's anybody's guess. A soft landing does seem a little bit odd, but I will tell you, like right now, things are, and I hate to say this, but I do think things are a little bit different, especially if we're taking a look at like the timing of the cycles. Look this, check this out. I'm going to share this screen with you. And we talked about this like a couple of weeks ago when I was taking a look at just how things work as far as like the cycles, right? I made this very simple, mostly for myself because I like to make things easy, but it really goes like this. Having all-time high dip reset, right? 2012 to 2017, 2016. Then we have a having all-time high dip reset, having all-time high dip reset. It just kind of keeps going and going. What I want to take a look at is what it would look like from the all-time high of the previous cycle to the halving numbers. And if we did that in 2013, to the halving, it was 42% down. If we did it from 2017 to 2020, again, the high of 2017's to the next halving, 56%. And I did this, like I said, a couple of weeks ago when it was unfathomable to me. Is that a word? I don't know. $52,000. When it was 52,000, it was 23% down. That's 2 months prior to the halving. And if we even take a look at it from again, going 2 months back, not even to the halving, in 2013 to 2015, we were 60%. In 2017 and 2020, we were 60% down. So like when I take a look at these things, I'm like, things are a little bit different. But one thing does kind of scare me, and that is the anecdotal and the people that are talking about it now. Because, and we're going to get this question a little bit later about the enthusiasm about everybody who's in the market right now. And they're like, this is it. I got to sell my kids and my kidneys and really go all in. But I'm just going to say, wait for a second. There was this great post. This is from Bob Burnett. He's CEO of Barefoot Mining.
I saw your reply to that tweet, or you quote tweeted it or something.
Yeah, exactly. And I was like,
I laughed when I saw you.
Yeah, but the thing with, you know, like what he was saying is like, he's like, look, this is great, you know, and I've been talking about Bitcoin for years and no one really gave me the time of day. And then he goes, I'm at the club and it's changed tonight. Approached by person after person, want to talk about Bitcoin, no more talk of playing or dabbling. Most wanted to buy and buy fast. 2 guys wanted to start at the $1 million level and all wanted to go in at least 2 Bitcoin. A year ago, would anybody do that? No. I mean, except for us. Total incoming purchases just from the small gathering would be in the $4 to $5 million range, all our long-term holds. This is so different than anything I've experienced in the past 8 years. So again, I hate saying it, but it does feel a little, there's that part that's different, but the exuberance that's out there is not different. So it's all about where do you think it's going to go? I can't tell you what to do, but these days are looking pretty good, so I'm pretty happy.
Yeah. And it's a really big testament as well that we have seen these record-breaking volumes from the spot Bitcoin ETFs this week alone. And it also indicates that a lot of the institutional investors really did have a wait-and-see approach. They were waiting to see how the markets moved, how the Bitcoin ETFs launch went, and then they were looking to really kind of shake things up. So it is interesting to see. We have some pretty good comments coming through. We have Not Meme, who has responded to, Rob, your comment saying, "Hola, we are the stubbornest people on earth." I think it just shows the relentlessness that the people in the crypto industry have. And also A has commented that in 2014, I bought a pizza and 2 beers with 2.4 Bitcoin. So proud. Wow, that is extremely early, and also a pretty expensive pizza and beer. I hope it was a good one.
Yeah.
With pineapple and jalapenos, just as Satoshi liked it, right?
Blasphemy, Ben.
But it's true to what you were saying, guys, about the fact that it does feel different. And I know we'll get back onto the kind of general sentiment a little bit later, but did any of you in the last 24 hours get any messages from family, friends, you know, long lost cousins asking about Bitcoin? Or is that still to come for you both?
I got 2.
Okay.
And I was just like, oh gosh. But no, I did get 2. I think like we talked about this a few months ago. Like a few months ago, my neighbor asked about it.
Mm-hmm.
I think I mentioned that, but he's also like a little bit more tech savvy, you know. So you would kind of expect someone who's more in line or in tune with sort of tech and that kind of stuff to be a little bit more aware of maybe what's going on in the crypto space. Yeah. So now I'm starting to get some messages from people that I haven't really heard from in a while. And I guess the question is does it accelerate from there or does it not? And I don't know, but I did get 2. I mean, it's still nothing like it was in 2021. But I did know, I was like, oh, I got a couple messages from people. Actually, no, I got one yesterday and then one the day before. And those are the first ones I've had in probably like 2 or 3 months.
Rob, what about you?
I've just had one of my old friends who was investing with me back in the 2017 days. He sent me a message. He goes, "Hey, I saw Bitcoin's going up. I didn't want to tell it and jinx it." I'm like, "Well, good job, George, because it went from 64 to 60, so you screwed everything up." No, but
did jinx it.
Yeah, too bad you jinxed it. No, but that was about it so far. But I've had other, like just like Ben talked about his neighbor, kind of something like that, you know, a couple of weeks ago. But Not too bad. And Jessica, I mean, you're in Dubai, so like everybody probably talks about it over there.
Everyone does talk about. My mum did text me yesterday saying, "Wow, crypto seems to be doing well." My mother did get into Bitcoin in 2018 because I was already working in the space. So Lynn was an early bird, but I also have my electrician indicator, which I think I've mentioned to you guys before, that my electrician in the UK, I pay him in crypto and he will message me and let me know when some of his clients will ask him about that crypto thing. So he also messaged to say he's getting some more people ask him. So it's a good on the ground assessment of retail. But you know what is great, and I have to say, is that people are asking about Bitcoin. Whereas in 2021, I was getting more messages about NFTs and meme coins, which kind of leads us on to our next question. So let me share my screen because I have a tweet that I would like to get your opinion on. So we have Crypto T that tweeted out earlier this week. This cycle is different because the Bitcoin ETF, people can swap it to altcoins. So I want to get your guys' take on that and that statement. Is that something that is accurate? Do you agree with it? Do you not agree? Maybe Rob, we can start with you.
Yeah, I think. Well, I mean, she's right on that one aspect that it's not that you can't, but the people that are getting into the market for the ETFs, those people usually aren't going to get into and say, you know what, sounds good to me, Dogecoin. Also, what's up with Pepe? No, they're not doing that. They're probably morally traditional finance people who have been talked by their investment advisors and talked by BlackRock and Fidelity and say, this is going to be very big, get into this. And then people will probably stick with that. And then if you're just in traditional finance, you get into this Bitcoin ETF, and you just saw the massive gains over the last, what are we looking at? Over, how long has it been now since we got approved? A month and like 5 weeks, 4 weeks?
Yeah.
So if you're looking at that, you're like, that is amazing gains. I'm not going to get off this fast horse to get into something else. Having said that, there are other people that will say, okay, I'm going to, maybe people who've been in Grayscale forever, right? They're going to slip out of that and maybe put something into altcoins. I don't think altcoins are dead per se. Obviously not. I mean, look, if you take a look at the top 50 alts just today, the highest one that did the best was Dogecoin. It was up almost 50% for the week. And also from Arweave, I think it was up 128% or something like that for 7 days. So things aren't dead. It's just that for people to go from say, yeah, ETFs, let me sell my ETFs of Bitcoin, and then rotate into that, it's not going to happen. I mean, for the majority of it, I do think that people will stick around, and we'll see. I could be wrong on that one, but I don't see it going the other way.
Ben, what's your take on it?
Yeah, I mean, so I agree with it was Crypto T, is that right? I agree with that statement. But I also, I mean, I've sort of had that view for years now that there's not going to be that same typical rotation from Bitcoin to altcoins just because of monetary policy. But I think that is also a valid way to think about it. I mean, if you're holding it in a spot ETF, and presumably if you're holding it on one of these other platforms besides an exchange or besides in your own wallet, then maybe you don't want to deal with a crypto exchange, right? And if you don't want to deal with a crypto exchange, then how are you going to go buy altcoins with your Bitcoin, right? You're probably not. You're probably just gonna hang on to Bitcoin, and it's kind of like I'm sure everyone's aware of the Magnificent Seven, right? I mean the big tech stocks that have been basically ruling everything for a while in the stock market. When you have tighter and tighter monetary policy, it's a flight to quality, right? And quality represents companies that can survive tougher economic times. They can survive higher interest rates, right? They can survive higher rates, and that's why we've seen the Magnificent Seven do really, really well, right? No one doubts that Apple or Google no one doubts that they're gonna, that they won't be here, right? We know that they more than likely will. And so there's been a flight to quality. And I think the same thing has happened in crypto. There's been a relative flight to quality. And I mean, sure, we can point out, you know, things like Dogecoin that are up this week, but the reality, if you take a step back, is that Doge is still 82% down from its all-time high, whereas Bitcoin is only a few percent down from the all-time high. So yeah, I mean, it's not to say that you can't make money in the altcoin market, but the reality is that anyone who's been DCAing Doge over the last 2 years is probably not doing nearly as well as the person who DCA'd Bitcoin over the last couple of years. And that's what happens, is that Bitcoin is normally among the first to return back to the all-time highs. So I think it really depends, honestly. I mean, like 2017 and 2021, after Bitcoin hit its peak, there was a rotation into the altcoin market that lasted like 3 weeks. And those gains during those 3 weeks were absolutely insane. And I'm sure you guys both remember those times. But in 2019, we did not have that rotation into altcoins. It was basically just like once Bitcoin finally found a local high before it cooled off for like half a year. Once it found a local high, there wasn't that same rotation into altcoins. But the counterpoint is that in 2019, we didn't put in an all-time high. And I don't know if we're going to put in an all-time high or not. So that could also throw sort of a wrench into it, because normally long-term holders, if you look at like the HODL waves or the HODL waves, right, normally long-term holders start to sell after Bitcoin makes new highs. And so, and again, it's not everyone, it's just a few people that will start to sell after such an event. So I think that the ETF stuff, that tweet is valid, that it's not like those guys are going to just go convert all their Bitcoin to altcoins. And it's precisely why the Bitcoin dominance will go higher.
Yeah. You had to get that in there, didn't you? So we have one really standout comment here from Capybara 13. My TradFi investor told me to buy WIF. Wow, I am amazed. Where is your TradFi investor advisor based? I'm very curious to hear a little more. But yeah, totally agree with you guys. I think we did an interview probably a few months before the ETF launched with Bitwise, and they had mentioned that, you know, they're aiming for 1 to 3% of their institutional investors' portfolios to be exposure into the spot Bitcoin ETF. That for them is already considered a risky asset enough. And the idea that then aping into the likes of Pepe and Doge just seems a little bit unrealistic. However, I do think what we probably are more likely to see is we're more likely to see a rotation from people that are crypto natives, people like us that have been in crypto for a while, that are taking some of the profits from the Bitcoin pump, from the spot Bitcoin ETFs, and then rotating them into alts. So hopefully that will all then reflect in a higher altcoin season and something a little bit juicy and tangible for us to enjoy over the next year or so.
Yeah, I gotta agree, because I mean, think of it this way, like the thing that I said in the very beginning, how we front ran everybody. The people who are in crypto right now, I think we know what could potentially be the next bigger thing. Now there's heavy risk, right? Going after Bitcoin, even going into Ethereum, even going into Solana, even going into Cardano. But if you, I mean, historically take a look at things and say, well, you know, maybe DePIN's the next narrative. Maybe the DEXs are the next, maybe AI, maybe Web3 gaming. If you know and you think of you believe that it's going to be the next big narrative, then you can front run everybody else just like you did with Bitcoin. But the question is, you know, how much risk do you want to take? That's really what it comes down to.
Yeah. And also, I guess, to pre-assume what new crypto retail investors are going to latch onto as a narrative as well. What kind of things will they be able to identify? What kind of things will they be able to understand? That was part of the reason why the NFT boom in 2021 was so euphorically big, was because it's pictures on the blockchain. You know, what's there not to get? And that's why we just saw completely nonsensical price movements from the NFT space. And if we can ride narratives that people can understand and identify with, DePIN, as you've mentioned, is a great one. Let's see how it goes. Okay, next question. And Ben, I want to start with you with this one. So taking a look from the macro side of things, the Fed's reverse repo facility and the bank term funding program, they're both coming to an end soon. Is this going to affect crypto by potentially drying up liquidity? What's your take?
The whole liquidity stuff, like the net liquidity that I've talked about before, it doesn't tend to be the best representation of what's going to happen to like risk assets on their USD valuations, right? Like, so, I mean, as we've seen over the last 2 years, right? Like net liquidity has been going down basically since early 2022, but it hasn't stopped risk assets from going up, right? So it's not, I don't think we can necessarily use liquidity to say what the USD pairs will do. I think what it's more likely to do is just continue the flight to relative safety, right? So people are more likely to want to get into Bitcoin over altcoins, but that doesn't mean that you can't see, you know, gains in the altcoin market, right? It doesn't take as much money to move the altcoin market as it does to move Bitcoin. But my view is that, you know, there's so many different altcoins, right? Like there's tens of thousands of them. And it's easy, you know, survivorship bias is a real thing, right? It's easy to look back and say, well, that one went up a lot. But I do think the reality is that the flight to safety will continue, to relative safety within each asset class. And that means people going to Bitcoin and away from the riskier things. And again, it doesn't mean those other things can't go up on their USD pairs. It just means that, you know, people are going to be, or they're going to want to go with the, you know, with the king, right? And who can blame them? I mean, Bitcoin has had so much more momentum than I think a lot of people thought it would have, especially with respect to the altcoin market. So that's my view. I mean, I think that it essentially just leads us from higher risk assets to lower risk assets, which you know, things like your altcoins, like, you know, I mean, like Rob mentioned, like Doge, like, I mean, these coins are certainly pumping, and we know that they can go up quickly when they start to pump, but I do think they will just slowly bleed back to Bitcoin over the next few months. I mean, even a lot of the altcoins that pumped off Bitcoin back in, do you guys remember that altcoin pump we had back in, that started like about half a year ago? Alt Bitcoin pairs, alt Bitcoin pairs are back down to those lows, right? Alt USD pairs are not, but alt Bitcoin pairs are. So all that euphoria that led from, you know, that happened in the altcoin market half a year ago, and all those crazy pumps, they've been impressive. I'm not trying to say they haven't, but alt Bitcoin pairs are back down to where they were half a year ago. And so again, the whole drying up of liquidity, to me, it's not necessarily representative of what they're going to do on their USD pairs, but it does show that they are still eventually bleeding back to Bitcoin as Bitcoin just continues to take more and more market share.
Okay. And Rob, what's your take? Did you have anything to add there?
You're
I
muted,
think you're mute.
I have to mute because there's some ancillary noise. Nothing really to add about the macro side, but just like with the altcoins, it's these pumps that we have, you have to understand that if you don't, I know this is a dirty word, I'm going to say the P word, which is profits. You have to take profits at some point. I know people hate that, but it's the reality. And if you don't take profits on these massive pumps, then, you know, what are you doing? Now you can say, well, I will never sell my Bitcoin. I will never sell my altcoins. That's fine. But I'm telling you, just like what Ben talked about right there was a massive pump for altcoins. Probably not a bad idea to take some off the table, de-risk yourself a little bit and get back in. To me, when I saw it, I'm like, this is actually pretty good. I get some more cheaper alts, and away we go. I don't think we'll see all-time highs for alts until after the halving, because usually that's when things actually happen. We see a halving, the spotlight is on Bitcoin, everybody's excited, and then altcoins start to take a run. Will that be a big, huge run like before? Anybody's guess. But again, it doesn't take much to move when your market cap's below $1 trillion, like say Bitcoin.
That is a good point. Profit taking in this kind of environment is always a tricky catch-22, because when the volatility is in crypto is high, as we know it is in this industry, it's quite difficult to time the markets. And they always say the saying, like, timing the markets beats timing the markets. And so DCAing in rather than trying to catch in these market waves. I've done it before. I think it was 2021, just before the markets really started to pick up. I exited Bitcoin a little too early and then had to re-enter in probably $10,000 per Bitcoin, more than it was when I'd sold. just a few weeks later. Like, it does happen. It can catch people out. So I think taking profits, absolutely right, as you've said. But also, if you are new to crypto and you're still kind of finding your feet, don't act too brash. And I have to give Ben a shout out, the Into the Cryptoverse DCAing in and out of crypto portal that you have, the calculator that will help you assess that. I think that's an excellent tool for people that are experienced in their first market cycle, just to help them make sure they do take some profits off the table as and when, and emotionally detach from it a little bit.
Yeah, for sure. I mean, I just DCA in and DCA out is all I do. And it's hard because you never know where the top's going to be, right? No one knows where the top's. It always looks obvious in hindsight, of course, but no one really knows. And so it's kind of like, as we continue to go up, everyone knows how to DCA into the market, right? Everyone knows how to throw all their money and everything into it. But yeah, like I think that the general idea is like kind of like what Rob was saying, like, like you can skim some off the top, take some profits, and then if it continues to go parabolic, that way, if you skim a little bit, you're like a little bit incentivized to want to see it go down in the short term, just so you can buy back in. But you're also not devastated if it continues to go back up because you only sold like, say, 10% or something, right? And I also think, and I've talked about this a few times before, like a lot of times, like like married couples, there's usually like one person that's really into crypto and then the other person really isn't, and I think the reason is because the one person that is sorry, I'm sick. The one person that is, they never actually take money out, right? They only ever put money in. And so the other person who doesn't like crypto, all they think of crypto is as like a black box where money goes into and never returns from, because a lot of people will celebrate like 100x moves, but then they'll never take profits and then they'll just watch it drop 99.9%. And so I don't think you can blame, the people that are not really into crypto for being frustrated, because the person that is a lot of times struggles to, to ever take profits. But, if you do take profits occasionally, and then you show that person, hey, like, look, I put this much money in a year ago. Here it is today. It's up, say 3x. I took 10% off the table, and, then we're going to let the rest ride. Then that other person can start to think, oh, maybe there's something to this, right? You actually had a return on it and you cashed it out. And now we can use that money, as maybe like a down payment on a house or something. So they can see like how it benefited. I think that's like something for people to think about, especially if they have a spouse that is really not into the crypto space. Like if you put yourself in their shoes, all they ever see is people throwing money into altcoins, and it usually just never comes back.
Yeah, crypto among the naysayers does seem to have a little bit of a bad rep still. But you know what, guys? With the markets moving the way they are, we're going to see new retail enter the market. Some perceptions are about to change, which actually brings us to the next question. New retail traders. So what are some of the signals of the start of the real bull market? And what does the crypto industry need to do to attract more people in the space?
You're muted,
Ooh,
Rob.
Rob, you're muted.
He just told everyone his $1 billion idea, but because he was muted, now we'll never know.
And that's how I made my first $100 million. Yeah. Sorry. So, yeah, to get new people into it, it's pretty tough because, unfortunately, what do the majority of people know? They know the same things that the Gary Genslers and the Elizabeth Warrens of the world tell them, unfortunately, and they're brainwashed and they think that this is this is the awful thing of all time. Because FTX and Voyager and Celsius and BlockFi collapsed, that has to equate to Bitcoin, and that has to equate to all the massive energy use. And it's difficult to get over that because people don't do their own homework. They don't understand about the macro environment. They don't understand about quantitative easing. They don't understand about inflation. They really do think that it's just the greedy corporations. So when they hear about this new thing, they're like, "What? That doesn't make any sense." Because MSNBC told me something different. So for us to get new people in, it really just comes down to education as much as possible, and not being so hypey. I know when Jessica, you've been in longer than me and Ben. Ben, you've been in quite a long time. I've been in since 2017. And I remember every single time we get these parabolic bull runs, it's the same thing. It's a bunch of hype machines spouting off about the next greatest thing of all time. And it screws up. It just makes for a really trashy kind of junk market. So for us to get new people in, we have to not just have a white hope and a dream. We have to actually bring something that's tangible and can actually be used. That's why I'm so excited about DePIN, decentralized physical infrastructure networks. If we can do something like that and show people it actually works, and if we can actually have these ETFs and actually move things and have price appreciation as people they get out of the rat race that is the inflation, I think that's one of the big things. That's why I'm so big on Web3, because I don't care who you are. Even if we go into a bear market, people are still going to play games. And if they can just understand that there's a way to actually own your in-game assets as opposed to the other games that are out there, it's going to be a big win for everybody. So those types of things, I think it just comes down to execution. The problem is, who is it going to be? And for that one, that's where it comes down to being a little bit of spreading around your wealth and investing in different things. So that's where I see it. Hopefully it moves in the right direction.
Yeah. And that's a really good point, is DePIN as a use case. I mean, we've seen Helium, if like telecoms, for example. So we saw Helium recently has kind of been getting a lot of attention because of what they're offering when it comes to the price package for the all-inclusive SIM. So therefore it is cheaper for you to use and you get the reward and staking advantage. World Mobile is another great example. I joined the team on a Twitter space yesterday, and they are now kind of rolling out another round of kind of telecoms infrastructure across the US. It's like, as soon as you can show people real life examples that are cheaper than the current, more scalable, they're easier to implement, and also you get staking reward incentives. You don't need to understand how it works. You don't need to understand the layer 2 architecture. You just need to go, okay, this is the benefits I get directly into my phone. I own them, and then I can do with it what I wish. And that's really powerful. And hopefully, as we do start to see markets pick up again, people will start to get more coverage on kind of mainstream media of these kind of narratives and push it forward. Ben, what's your take on kind of new retails into the space? What do we need to bring them in? First of all, what do we need?
Yeah, no, I think I think a lot of entrepreneurs that are just creating in the space. I mean, if you think about like the tech bubble from the .com crash, look at tech today. I mean, look how impressive it is today, and it was because there's so many entrepreneurs that saw the how great that the internet was, and then they just built out a lot of products, right? It was the utility that brought people into the space. Dubious speculation only gets you so far, right? You still need utility. You still need like what is going to make the average person, like crypto, right? Not the people that are just want to be investors, but the people that actually use it. I think that's what that will bring a lot more people. I think, I mean, honestly, I think just people kind of doing like what we're doing, just talking about crypto, right? Starting up a YouTube channel, starting up a podcast, creating a Twitter account and doing spaces. And, it's hard when you first start out because no one wants to listen to what you have to say. But you'd be surprised. I think a lot of people would be surprised how quickly that the channels can grow. And so I think that, and I think that if a lot of the sort of the influencers, to just have more trustworthy people, right? That are saying what they mean, and they're not just paid off to promote a scam that gets rugged next week. That really detracts from crypto because I've said before, right? Your followers are not exit liquidity, right? You can't. People should not hype up this random scam and then expect their followers to buy it, and then when it crashes they can't just say, oh well, I didn't know. Like, no, like if you talk about it, you have the responsibility to do your due diligence on it, and if you can't, right, if the people that you feel like if you just simply cannot do that, then they shouldn't be promoting it in the first place. So that's a huge issue, because I've seen it even happen in the last several months where a lot of different scams get promoted. People buy those, they get rugged, and while some people come back and continue to play the game, there's got to be a few people each of those times that just kind of like lose a lot of their money and get infuriated and just leave because they equate crypto, they equate their experience with that one sort of rogue influencer with everyone in crypto. And that's how kind of it gets a bad name. Like, it's like with not all altcoins are bad. It's just that you have to be aware that there are a lot of people that they'll just keep creating new altcoins. They will pay someone to promote it, they'll rug it, and then they'll just move on to something else. And if you're an investor and if you've seen that happen several times in a row, like, you're just going to throw in the towel. So I think if we could, as an industry, if we could try to move past that phase, that would, it would help keep people here rather than have them leave. The stock market doesn't typically have like 80% bear markets like crypto has. How often have we seen an 80% crash in stocks? It does happen, but it doesn't happen very frequently. With crypto, it happens every 4 years, and it's just because there's so much like froth and filth in the space that has to get cleansed. But hopefully we can reach the point where we don't have to go through 80% bear markets, and we reach the point where there's more trust in the space.
Yeah. And then real quick, Ben, and it's not only the projects that get rug pulled, it's the platforms that get rug pulled, that are the Ponzi schemes. Like for me, like when I talked about Voyager and Celsius all the time, because when I looked at them, like, these guys, they seem legitimate. And, even like Mark Cuban did his due diligence for Voyager, introduced them to the entire Dallas Mavericks stadium, or his indoor basketball. And you look at it and you're like, these lessons that when I came in, and I know when you guys came in, it was the same thing. It was never leave anything on exchanges, right? And we learned these lessons, and we're like, and we shut them out because we're like, whatever, boomer. I know what I'm doing because I'm smarter than you, and I just got here. And of course, that was the Mt. Gox era. And the same thing happened again. And now we're going into, like Ben talks about, these different rug pulls that are just all over the place. And if we don't learn from them and talk about them, like my mistakes, then we're doomed to repeat them over and over again. That's why I'm always preaching about cold storage devices and getting the hell out of these these exchanges. Even Coinbase went down yesterday during the peak of this monster rally. So the things that we learn, hopefully we can take them forward and teach people and make things a better
right. Place. And there's a lot of, I think there's a lot of growing pains because it's a relatively young asset class. But I would like for us to all, and I've made tons of mistakes. Like, I can't even count how many mistakes I've made.
What? Really?
Yeah, no.
No, it's really.
Everyone here can tell you. I've made tons of mistakes, but I think we have to learn from them. We have to learn from the mistakes of the past and move on. And otherwise we'll be destined to repeat them, And I hope we don't have to repeat them. And, I hate to say it, and I know everyone loves these spot ETFs, and I think that they're leading to a lot of money coming in. They do go against the ethos of Bitcoin. They go against the Bitcoin's whole thing. And on one hand, I'm like, all right, well, it's a good thing because that means more money's coming in, and it kind of makes the dominance of Bitcoin go up, which I'm not going to complain about. Right. But on the other hand, I'm like, gosh, everyone who was preaching not your keys, not your crypto 2 years ago in 2022, they're not saying it anymore, right? Instead, they're just telling everyone what the most recent inflows to the spot ETFs are. And I'm just like, are we repeating the same mistakes? And we're just not, but it's considered safe now because it's like BlackRock or, because it's more trusted institution. I don't think it's like the same type of risk, right? Like, it's not, these institutions are not the same type of risk, I don't think, as like, holding your crypto on some of these like super shady exchanges or these other platforms. But there's still like that part of me that wonders, like, are we repeating the same mistake? So I think it's important for us to remind everyone at the end of the day, not your keys, not your crypto, right? That's the important thing. And also, I do think the spot ETFs offer something for people that don't want to deal with exchanges and they don't want to deal with a a cold wallet, right? I think that they feel that niche, but at the same time, not your keys, not your crypto, right? And also, if you're holding Bitcoin in a spot ETF, they're going to take a cut. I mean, like the platform's they're not doing it because they're like pro Bitcoin. They're doing it.
Sorry, that was funny.
They're not.
Well, I mean, like look at what JP Morgan, like look at what they said. Look at what they said, and then they're also, it's just it's a money thing, right? That's why they're doing it. It's all about the money. It's nothing more than that. So just remember, like, and they're wanting to make money, right? And the way they do it is by getting people to buy their spot ETFs, and then they take a big cut of that, that people wouldn't be giving them if they just held their own Bitcoin.
But then following on from that, so spot Bitcoin ETF issuers obviously want to make money. The price of Bitcoin has gone up because of the demand. Retail investors want to make money. And I think that's the main entry point for retail investors. Unfortunately, we love crypto. We love everything that it stands for. We love what it can give the people. This is why we are working in the space. We're educating you guys. This is why you guys are in the comments, interested to see how the industry grows and thrives. But ultimately, new retail don't care about a Dan Kuhn upgrade on Ethereum that's coming up in a few weeks. They just want to know, oh, Bitcoin's going up. If I put $100 in, I would have $200 6 months later. That sounds great. Sign me up. And it is as fickle as that in the short term before they get in and start to educate themselves. And mainstream media covers crypto when there is a big bad crash, a big bad downfall of a platform or court case or lawsuit, or when there is a upward price potential. It's one of the two that gets covered. So people are either terrified of crypto and it's a word that shall not be named in the house over dinner time, or it's seen as something which is a little bit more interesting and lucrative to get into. And at that point, it's starting to already be maybe even a little bit too late. Markets are already heating up.
Yeah. Hey, Jess, have you heard of any news outlets covering El Salvador and how much they're up? Because I remember them covering it like crazy when they were down big time. But I haven't seen too many different stories where it's like, oh, they're up like billions of dollars. I don't know if I missed it. And of course, people in the comment section correct me. I haven't heard anything.
Did you see the guy who's dunking on Peter Schiff on Twitter?
Yes.
I'm like, on no other platform do you ever see this stuff happen.
Yeah, the president of a country is dunking on the gold bug of all gold bugs. But
I think Peter Schiff, because you're based in El Salvador, you're based in Puerto Rico. I think Peter Schiff had a talk on a Crypto Monday show in Puerto Rico a few weeks ago, which was called Not Crypto Mondays. And I think that was probably about 2 weeks ago. So I'm sure he's probably kind of gritting his teeth looking at the crypto markets now.
Oh, yeah, him and Jim Cramer, same ways. Oh, well, that's fine. That's fine.
So let's see. Yeah, but hopefully, when we see kind of spot Bitcoin ETF inflows, the ETH possibility of an ETH ETF coming through, these are all things that could have kind of a bullish or optimistic sentiment on the price. Then if the price goes up, hopefully then we'll get the mainstream coverage and then the newbies can come on in.
Did you see the probability? I didn't.
Yes, I did. So the probability of, this is according to Polymarket, for Ethereum ETF approved by May the 31st is a 45% likelihood.
Oh, so it's basically what it was last time. It hasn't really changed. Yeah. I think maybe it was 43% and now it went up to 45%.
Yeah.
So basically unchanged. All right.
But it's also curious to hear if this does start to become a bit more of a narrative over the next few months. What are the kind of expected volumes that we'll be anticipating? Because by the likes of Bitwise and BlackRock, they massively underestimated how much volumes they would have for the spot Bitcoin ETFs. I think we all did. We're all very pleasantly surprised. I know James Seyfarth from Bloomberg has been speaking out saying, guys, I did not expect this to pick up the way it did. So I'm sure it'll be interesting to see what the expectations are for ETF volumes if we hear more of that as a narrative. Okay, so before we go on to the next question, we've had some very good comments coming through, so I'll give a few of them a shout out. So one that we've had is, in 2011, I mined BTC in my PC. I told my mum that there is internet money. Mum said it's not true and it's a scam. I believed her and deleted it.
That's That's pretty much what I told my kid.
F in the chat, right?
That's exactly what happened. Like my son brought back, he said, hey, there's a kid at school. This is 2012. He's selling 500 Bitcoin for $500. You want to buy it? I'm like, what's that? It's internet money, decentralized. I'm like, doesn't make any sense. That'll never work. 500 Bitcoin gone.
Oh, ouch. It's gotta hurt, guys.
Oh,
Now,
yeah.
this is the question I've been most excited to pick your brains on today, and this is the Wall Street cheat sheet. So let me share my screen just for anyone that is not familiar, and we can give a little bit of a breakdown of what we can see. Can you all see my screen here? Yeah.
Yes.
Okay, so this gives a run through of the psychology of a typical market cycle. So there is kind of starting off hope and disbelief, then we're moving up into optimism. Belief is the time to fully get invested. Thrill is I'll buy more on the margin, gotta tell everyone to buy. Then there is the peak, which is euphoria. I'm a genius, we are all gonna be rich. And then as it starts to dip down, complacency, well, you just need to cool off for the next rally. Anxiety, why am I getting margin calls? The dip is taking longer than expected. Denial, the investments are with great companies, they will come back. Panic, shit, everyone's selling, I need to get out. Anger, who shorted the market and why did the government allow this to happen? Depression, and then moving into disbelief. It's $1 million question, guys, where we are currently. And I'm wondering if we all have similar answers or different ones. Also, everyone in the comments, please let us know your thoughts too, and we will read some of them out. Who would like to go first and share their theory?
I was looking at the fear and greed index is at 80. It was at 82 yesterday. Now it's at 80. And so, I mean, a lot of times, not every time, but I think a lot of times it'll go into the 90s at some point. So, I mean, it kind of seems like we're getting pretty heated. But I mean, you know, you probably could have said the same thing, like going into spot ETFs too. So, and in late 2020, we got into the 90s with the fear and greed. And then we stayed in the 90s for like, you know, a couple of months, right? Before things actually cooled off. So, I mean, I do think we're getting pretty heated. I don't know if it's like, you know, absolute euphoria at this point, but I mean, it still seems like the fear and greed index could go up a little bit higher in the short term. I mean, the risk models that I use, I mean, if I just go look at the risk here on Bitcoin, I think it's nearing the 0.7.
Yeah, it's not even there yet.
Yeah, so it's 0.687. So that's where we are. So we're basically at 0.687 risk. So we're nearing the 0.7 to 0.8 risk band, and you know, there's some peaks, like some local highs went all the way up to the 0.9 to 1 risk band. That's where we went in early 2021 and in late 2017. In 2019, we went up to around 0.7 risk. 2011, one of those we went up to like the 0.8 to 0.9 risk band. So like, I mean, things are definitely heated, right? I mean, like it's basically been up only for months now. But yeah, I don't know if it's you know, absolute euphoria yet, because I still think there's some liquidity, I think, from alts that still need to make their way over to Bitcoin.
Yeah, I think it's the same thing, and everybody's different. But you'll see some people, they're on it's like on a scale. Some people are still in disbelief. Quite honestly, they're like, you know, I think it's going to crash. I think it's going to go down to 12K or whatever they think it's going to happen. I don't think we're at euphoria. Maybe for most of us, we're in at least the belief stage. We believe that's, you know, right place, right time, or right here before the halving, things are going to go great. But I don't know if everybody's all in, and you know, I got to start selling my kids and my kidneys and my house and everything else to go. That I think is going to start coming, especially if these ETFs continue to do exactly what they're doing. I think there's 900 Bitcoin mined every day, and there's over, I think that's the demand is 10,000 plus for these ETFs, and it only accelerates. So I think it was I forgot who said this, but essentially for the OTC desk, you're looking at them to become extinct in like 12 to 14 weeks. And then if you have the same demand or more, and you have no supply, what happens then? So in the next, and again, right after the halving, right after April 20th, what's going to happen? It's going to get, I think things might get a little crazy, and let's hope so. Huh? See, now you're muted, Jessica. Great. I don't feel bad today.
Happens to all of us, guys.
Yeah,
so that block has also kind of put everything into perspective a little bit and said that in the last euphoria phrase, some kind of meme coins, some shit coins rented a 10-meter digital wall on Amsterdam Central Station, and there was other billboards in the city. We're not there yet. I think that is quite a good reminder. When there was peak euphoria in the markets, when we did see, the kind of mainstream media ads, as Nick reminded us here in the office today, there was the crypto.com stadiums, all the football stadiums getting rebranded and bought by crypto companies, crypto ads on mainstream media, Saturday Night Live shows with Elon Musk promoting meme coins. That was kind of a euphoric time. I think we're still at the stage where people are starting to post and talk about it. People are starting to get excited. They're already in crypto. Maybe the retail investors that got in last year, that got in when the markets were at a similar price point to how they are now, they're starting to reopen their Binance account, their crypto account, and maybe look at putting some more money in. I've had a few people say, okay, my portfolio is kind of at a parity level to when I first got into crypto in 2021. Should I put some more in? So I would agree with you guys that we are in the belief thrill area. There's a lot of momentum. Crypto X is a very pleasant place to be at the moment. Everyone seems to be in a pretty good mood. Yeah. But I still think we've got a good run left. Let's go to the comments.
Yeah, absolutely. I don't think we're anywhere near close. I mean, if you were here in 2021, you know exactly what I'm talking about. Everything went up. I saw somebody in the comments section said Safe Moon. Exactly. You start seeing stuff like Safe Moon, watch out, because we're about to top.
Yeah. We also have, when you see a dog in a hat with the advertisement, that is a time to sell.
That is it right there.
Which is a very good point. Okay, guys, we have maybe a few more minutes for some questions. So maybe I can run through some of the questions that we do have in the comments. This one is directed to you, Ben. Do you think we'll enter a left translated cycle if Bitcoin reaches a new all-time high before the halving event?
I think, I guess it depends on what even a left translated cycle is. Because I feel like there's some look, so two of the cycles that we've had so far were double peak cycles, right? 2013 was a double peak cycle, but the second peak was much higher than the first peak. And then 2021 was a double peak cycle where the peaks were essentially the same. I think that's possible. I think it depends on how high we go. I mean, like if we cool down around, the 60 to 70, like if we cool down in this range, just for a few months, kind of after the halving, like let's say we see this excitement continue for a little while. And then after the halving, once we get into sort of the, do you remember like 2021, like how it was kind of boring for a few months? Like if we can see something like that happen, then you could get another move up right later on. But I guess it depends on just how high it goes. I mean, if we sort of front run everything, then yeah, like it's possible that you could see some type of left translated cycle. I think was it Bob Lucas that
Bob Lucas.
Yeah. So yeah. I don't know. I mean, I think he's introduced the idea, but I think he's gone back and forth on whether we're actually experiencing that or not. Yeah. So I don't know. I mean, I don't really have a strong opinion. I think that we are definitely ahead of where we normally are. So I would expect a cool down point at some point this year, and then we'll just and probably that cool down point happens around the time the Fed starts to cut rates. Is my guess. Is like the Fed starts to cut, the markets cool off for a little bit. We look around and we see, all right, is it a soft landing or is it a hard landing? If it's a soft landing, then it's probably not a left translated cycle. If it's a hard landing, then it very well could be. So it probably just depends on how high we go and what the Fed achieves with monetary policy.
Yeah, that's why like last week when we talked, Ben, you talked about the selling points and also a hodl bag. Just have that. Makes a lot of sense.
Right. And also remember, like, this is a great example. Like, look at where Bitcoin is and look at the altcoin market. Which one is near new all-time highs? And yes, there's some random there's some random altcoin that I'm sure is pushing new highs. Rob, I don't need to hear it.
I'll tell you after this. I'll tell you after the show.
Yeah.
Go ahead.
But most of the altcoins that people were talking about in 2021, right? Most of them are nowhere near their all-time highs, and Bitcoin is. So the point is that even if there is a larger pullback in crypto, Bitcoin will likely recover to all-time highs before, its counterparts in the altcoin market. So that's how you sort of preserve the Satoshi valuation, is you just say, all right, well, I don't know what's going to happen. I'll keep my portfolio Bitcoin heavy. And if there is a larger drop, okay, so be it. Bitcoin will still likely go back to new all-time highs well before the altcoin market does. So I think that's kind of how because no one really knows if it's going to be left translated, if it's going to happen when it normally does. No one knows the answer to that question. And I think you got to have a plan either way.
Yeah. Fantastic. Just finally, Rob, you were preaching the importance of self-custody and cold storage of cryptos. We do have one question on kind of keeping money on exchanges. If you want to transfer to cold storage, which stablecoin would you recommend? Do you have any hits or tips for our good friend Sir Monkey here?
Just remember that not all stablecoins are created equal. Remember, there was a stablecoin on Luna that didn't work out too hot. So, and every time people talk about Tether and they say, it's going to collapse, and it's just, there's shenanigans going on behind the scenes. Tether's been around forever. So I don't know what to tell you, but USDC, in all honesty, unless I really have to use Tether, I'll put things into USDC. And of course, you can put that on your Tangent cold storage device. You can put it on your Ledger. You can put it on Trezor. And depending on what different platform you're using, it could be on Ethereum. It could be on Tron. So if you want to use stable coins, remember, you can take those off of the exchanges and then just kind of go from there. So if I had to do anything right now, it's USDC or cash.
I thought it was funny how everyone was so concerned about USDT in 2022, and it was like one of the only ones that didn't lose its peg for a while.
This is true. This is craziness.
Okay. Gentlemen, thank you so much. That was a fantastic episode. I really enjoyed the conversation. A huge thank you to everyone in the comments for sending in some hits and tips. I do have to give a special shout out. This has been my favorite comment that we've had in. This is from another Jessica, who's also in crypto, who also has their mum's name Lynn. So Jessica, thank you so much for watching. We're destined to be friends. But guys, thank you for joining. That was great to join with you both. As always, really enjoyed the conversation. And I know, Guy, I'll be back with you both next week on one of your channels. Do you know who is hosting next?
Should be my channel next week. So we'll talk all about dominance.
Fantastic. The time is now. Amazing. So guys, if you have not yet subscribed to Ben and Rob's channels, do make sure that you do so. Guys, thank you so much for the conversation, and let's hope for another green week. Let's see how things go. Thank you.
Thanks, everybody.
See you guys.
See ya.